Hello, everyone. I'm Chris Kapches, president of Chestnut Park Real Estate, and today I'm going to be providing you with your Toronto and region market report for June. Could probably talk for an hour on all the things that happened in the month of June, but I have to restrict it to the 5 or 6 or 7 minutes that we have for this presentation. First place to start is that in the month of June, for the very first time since the beginning of the year, we saw a month-over-month decline in both the number of sales that took place and the average sale price. You can see from the chart that's on the screen that in June we dropped to 7,481 sales. Last month, that is the month of May, we had 9,997 sales. So a month-over-month drop of almost 17%. Also, but on a marginal basis, you see a change in the average sale price. The average sale price in June was $1,182,000. In May, it was $1,195,000. Again, a marginal decline, but a decline nonetheless. Answer to why that happened is probably threefold, might even be more complicated than that, but primarily it has to do with affordability. During the month of June, the Bank of Canada increased its benchmark rate by a quarter point, taking us to 4.75. That's the highest the bank rate has been since 2001. Unfortunately, as we are filming this presentation, the bank is contemplating a further increase in the bank rate. And if affordability was a problem in June, it's going to be an even bigger problem in July. So slightly looking forward, we're probably going to see the market perhaps soften even more than what I've just indicated in the data that I just provided you. But when I say soften, one has to take into account that that is a relative term. Overall, the market remains extremely strong, and I'm going to demonstrate that in a moment. The problem is affordability. So there are fewer people that can afford the properties that are on the market. And on top of that, the number of properties on the market has declined over the course of the year. And as a result of that, mere access to properties is not that abundant. For example, to show you how strong the market really is, detached properties in the city of Toronto sold for $1,785,000. That's for the entire city of Toronto. Semi-detached properties sold for $1,408,000. That too is for the entire city of Toronto. So we might see that decline from June to May as perhaps being an indication that the market is softening. I don't believe it is in the least. In fact, the market has strengthened throughout the year, and you'll see from the chart that's on the screen that beginning in January, there has been a continuous increase. The reason that increase is taking place is because throughout that period, the Bank of Canada maintained a stable benchmark rate, raised it in June, and immediately we see a reaction to that increased rate. But I wanted to show you how strong the market is even outside the city of Toronto. So you'll see from the chart behind you some communities that are outside the city of Toronto that historically used to be quite inexpensive. One of the reasons why they were inexpensive is because people had to commute to them. And as a result of that, prices were kept lower. But just look at these numbers. Milton, average sale price, $1,115,000. Brampton, average sale price, $1,113,000. Mississauga, $1,112,000. Pickering, $1,128,000. Uxbridge, 1,334,000. That's even higher than the average sale price in the city of Toronto. And Whitby, 1,097,000. In order to find a property in the 905 region that is under $1 million, you have to go to the outer reaches of the region to find properties that are under $1 million on average. That was not the case a few years ago. Pre-pandemic, in some of these areas, the average sale price was coming in at about $400,000 to $600,000. So that is an indication how strong the market is, not only in Toronto but in the 905 region. Other factors that demonstrate how strong the market is that you see all properties that sold during the course of June selling in 14 days. That's correct, 14 days. That's the length of time on average properties have spent on the market. Not only did all properties sell in 14 days, but they all, at least on an average basis, sold for more than the asking price. In some cases, for example, in Toronto's eastern districts, for as high as 118% of their asking price. So clearly what we see is huge demand, but unfortunately only some people can afford these very high prices that I've been describing to you. That is going to continue to be our problem going forward, particularly if in July the Bank of Canada increases its benchmark rate again, as is anticipated, as has been forecast by numerous economists, to 5%, which would be the highest it's been in sort of recent memory. That in turn will have an impact on affordability, as I mentioned at the beginning, and that impact will mean there'll be fewer people that can afford the properties at these prices. The interesting component of all this is what happens if that benchmark rate stays at that level for any length of time. Right now, again, economists are indicating that benchmark rate should start coming down in 2024. If that does, then that'll be a short period of time, which will be a period of time that won't have that great an impact on average sale prices. Sellers will just simply wait. They'll wait for their opportunity to sell to someone who can afford it, and the average sale price will stay as high as the ones that I've been mentioning during the course of this presentation. If the benchmark rate stays high beyond that, then what we're going to see is that average sale price start to come down. And the reason it's going to come down is because consumers, even though there's a lot of them out there, that there's a lot of buyers who want to buy these properties, they just simply can't afford it. They can't qualify, don't have the down payments. So as a result of that, the price will retract. So it's a kind of a chicken and egg real estate game that we're in right now that time will tell. Hopefully have a little bit better handle on that when we do our July market report. But at this time, it's all pointing to the fact that we're going to see the market plateau and perhaps slow a little bit because of the affordability issue. Why is the demand so high? At the end of the day, the demand is driven by immigration. Statistics Canada reported that in the month of June alone, 84,000 new immigrants came to Canada. That's just in 1 month. Everyone that comes to Canada has to live someplace, so hence the incredible pressure, the demand on housing. And unfortunately, there just isn't enough available housing to meet that demand. In the month of June, the total number of active listings that came to market were 14,107. That's 12% fewer than came to market last year. So, as I said, supply is shrinking. So those are all the various factors that are at play in the marketplace. A very complex month for market and economic data, all influencing how the market is doing. I'm very much looking forward to providing you the July report when we can make a little bit more sense of all of this stuff that's coming together. Until then, stay well and look forward to making that presentation for you. Thank you.